From Wish TV and the All Indiana Podcast Network, this is the Business, Equity, and Opportunities Podcast with Scott Sander.
Welcome to the Business, Equity, and Opportunities Podcast. I'm Scott Sander. On this episode,
we first met Heath Butler in February when he was in for the All-Star Minority Business Opportunity Week. He visited with us at our booth at Innopower Minority Business Week at Raleigh last month then with a new focus, using technology to help marginalized communities access capital.
Every business is unique and has a target audience. If you own or manage a business, Circulus Digital Media can help you connect and grow your customer base with turnkey digital solutions that are nimble, offering best-in-class results, service, and support to reach a bigger customer base, allowing you to pinpoint a specific audience down to the smallest details. Get outside the city, the state, span the globe. Put Circulus Digital Media to work for you. Get started now at circulusdigital.com. That's circulusdigital.com.
Your role at Raleigh specifically, what have you done today?
So I just finished a panel with the Innopower Minority Business Week, talking about democratizing wealth creation in the innovation economy.
So in a broad way, that's what everybody in this building is most interested in. Seems like you have access to some of the resources. How are people missing opportunities to connect to that? How can you fix those opportunities?
Yeah, so in general, you know, what my observation has been is that the innovation economy has bypassed a lot of marginalized communities. And that has happened because you hear about the amount of venture capital dollars that are allocated to founders of color, or really anybody in a marginalized community, right? It could be a young white kid in rural Nebraska.
Right.
And so when that happens, because all communities have some type of connection to innovation, and it's helped their community thrive, then those communities don't have all of the resources and have all of the access to the things that can help them thrive.
Sure.
And if you don't step in and find a plug for that problem, right, it gets worse. And so I'm part of a nonprofit organization and a for-profit organization that are working to try to solve that problem, to create a rising tide in marginalized communities.
Get into the details, the weeds for me. How does it work?
So at the end of the day, we got to first talk about a problem, which part of the problem, which is that in startup world, technology world, when there's a venture-backed company, the founders of that company initially own 100% of it.
Right.
As they raise capital from people like me, they give up some of that equity. And so the way the data outlines it, it works, is that when a founder is successful and they sell that company for $10 million, $50 million, $100 million, or $1 billion, on average, no matter what the liquidity number is, the founder and the rest of the management team end up getting about 18 to 22% of the proceeds from that liquidity event.
Total, all of them. Yeah.
And the rest of that money goes to the investor.
Okay.
So in marginalized communities, when they do land capital, most times that capital is coming from outside of the community.
Okay.
And when they're successful, again, same numbers, they're only going to get 18 to 22% of that.
The rest of the money goes outside the community.
The rest of the money goes outside the community.
Yeah.
That's a problem.
Yeah.
And so while there are a lot of advocates pushing the agenda that founders of color, women, need more venture capital dollars, if those dollars aren't coming from communities of color, other women, we'll never solve this barrier that we have.
Right.
And so the nonprofit provides education into these communities, free education, to try to make them aware that there are vast amounts of opportunity if the people that have been successful in these communities could be a professional that works at a big corporation here in Indiana, could be someone that's been a real estate investor.
Right.
So whoever the success stories are in those communities, they need to understand the power in them taking the dollars they have and getting involved in investing in their community. And we give them pathways to do that are de-risked, where they can minimize the downside, because the venture capital space, this sort of innovation economy, it's one of the riskiest asset classes you could invest in, but it's also the one that's produced the most wealth in the United States over the last 200 years.
Yeah.
So how do you help people who aren't aware put their capital at risk in a new space that's the riskiest way possible?
Yeah.
So we teach them how to do that in a de-risked way that helps them to benefit their community, but also do what we call manufacture capital for social impact.
As you're speaking, I'm wondering if there's a scenario where, specific to marginalized communities, is there a risk that they are also more prone to unfavorable terms with venture capital because there are fewer opportunities? You know what I'm asking?
Yeah, I totally get the point you're asking. And historically, I would say that would probably be the case with other loans when you think about redlining and you think about things like that. What I will say is the venture capital space is so sophisticated, they really don't care what color you are. The problem is, can you get access?
Yeah.
And so if you can get access, you're going to get the same terms.
Right.
The problem is we're not aware in those communities.
Yeah.
And when we do become aware, we don't have access.
Yeah.
So the nonprofit that I started works to actually create the awareness and point them in the direction of how they can get access.
Yeah.
And we partner with a for-profit organization that has a platform that allows these new investors to get access at very low levels. For example, my firm that I am a partner at, we have almost $1 billion under management. It's for new investors, you have to invest $500,000.
Okay.
The partnerships that we've created with these other entities that are trying to create this rising tide, they are working with people in those marginalized communities. They can get into these same investments in my firm, they can get in for as low as $15,000. And at that level, you have all sorts of people that want access, right? You have white males that say, wait, I don't have access. And so the platform is a very successful platform for anyone of any color, any gender, to sort of get involved. It's just that we advocate in communities of color and in marginalized communities that don't have access. We do a lot of marketing and efforts to make sure they're aware that they should take advantage of this, and then we let anybody take advantage of it. So it's not limited to any particular group or population.
It seems though the critical part of that is closing the loop on the back end though, so it's not just this unicorn moment where, hey look, they did great.
Right.
Then nothing else lifted the tide.
Yes, the closing the loop part is that, and I'm glad you asked that, it's really a two-tier, long-tail opportunity where you initially invest the money into high yield producing assets, and then you take the profits and you invest in the community where you're taking a little bit more risk. So initially you put that money into high yield investments, and then you commit that I'm going to use this opportunity to take the profits and invest in some of the riskiest opportunities in my community. But because I have this pathway to redeploy the principal every time into something I know is going to create high yield, I can now take some of the profits and take some risk. And that's the only way marginalized communities are going to become self-sustaining, is that they need to have a pathway to do what we call manufacturing capital for social impact.
So when somebody buys into that process, do they agree? Is it codified? Is it, that you are going to do this, or is it a, gee, we really hope you do this?
Right now, the group that we point them to, they ask for a gentleman or a ladies agreement that they will do it. But as the platform builds and gains more momentum, we actually have, there are some mechanisms out there where, just like at a major corporation where you donate $500 and your corporation can match it, there are some pathways where we will ask, hey, where do you want the 10% of your profit that you're gonna commit, where do you want it to go? Just like you can donate to a nonprofit, what investments do you want it to go in? So it'll go in your name, but we will give you a pathway that to get access to this high yield investment, you must commit a certain portion of your profits to an area of your choice that it'll go into for high risk opportunities, and that will help to create a rising tide.
So I'm not going to ask you to pick your favorite child here, but it almost sounds like you'll be thrilled with a success story, but maybe even more happy when you see that loop back underneath and you see, even if it's just a little bit of an improvement in the community overall because of the success of that one.
You know, I'm glad you asked. We've actually closed the loop. So we've, in the last 4 years, between the education, we've educated over 3,000 people, and the execution platform has had about 300 investors, and the management company from the platform and some of the investors, they have taken some profits that they've already gotten profits back, and they have redeployed about $500,000 into 6 women of color founders, and it's been really, to your point, gratifying to see that the model works.
And if any or all of those 6 then succeed?
3 of those 6 have went on to raise $1 billion or more from other venture capital firms. So as of right now, it's, you know, they haven't had any exits, but the process of getting profits from the initial capital, redeploying that into the community, and then watching them be successful to go on and raise more capital from an institutional grade firm like ours, that's been absolutely gratifying.
The ripples are coming from the rock.
Yes,
they're
absolutely.
All right. Anything I've not asked you about that you want people to be aware of?
No, what we need people to be aware of, especially here in the Indy area, is that Innopower is going to be partnering with the nonprofit IQ and the for-profit Urban Capital Network to launch this program here in Indy, and people should get involved and get educated.
Thank you very much.
Yeah,
you're
it was
great.
A pleasure, Scott. Thank you.
Our thanks again to all the contributors who joined us for this episode of the Business Equity and Opportunities podcast. We hope you found it enlightening, useful, and inspiring. You'll find more information about the show on our website, BEOshow.com. You can watch Business Equity and Opportunities Sunday mornings at 10 on Wish TV or live stream it through wishtv.com. Each week we provide 7 full segments with topics ranging from how to get started and how to access capital to the day-to-day running of your business and questions about accounting and bookkeeping. We feature business news and trends and always share a success story from one of our contributors. Join us next time for more insights into the world of small business. Be sure to sign up for our Business Equity and Opportunities newsletter to get even more valuable, up-to-date information. And if you have any questions or you'd like to be part of our show, please email us. The address is beo@wishtv.com. We'd love to hear from you. I'm Scott Sander. Thanks for listening.
Watch the Business Equity and Opportunities show on Wish TV and access all of our content and share it on demand anytime at BEOshow.com. You can find more podcasts from Wish TV on the All Indiana Podcast Network at allindianapodcastnetwork.com.